It's Sunday evening, July 12th. I'm trying to get my market bearings after the weekend, trying to find some swing trades. Please join me over the course of the next 20 minutes. I'm going to try and keep this short. Hello, traders. We had a really strong close to the market on Friday. We're into this little gap right in here. SPY 317.60 was where we closed. We had some great lotto trades last week. Boy, they were fantastic. Walmart, the banking stocks that I showed you early in my video on Friday, they were on fire into the close. They played out beautifully. Speaking of banks, earnings season starts this week. The scene is going to be dominated by major banks. We've got JP Morgan, we have Citigroup, we have Wells Fargo, Goldman Sachs, PNC, Bank of America, Morgan Stanley, State Street. Those are all banks that are going to be reporting this week. We've got pretty tough conditions for banks. I think we're going to see a lot of write-downs, bad loan write-downs, and in a zero interest rate environment. I don't think that's going to be good for banks. I also feel that as the coronavirus drags on, it's going to start weighing on the economy, could impact jobs. So I think that's a potential future concern. But all of these bank stocks have really been laggards. So bad news is expected. There's no fluff to take out of them, so to speak. So I don't think they're going to go down dramatically. I don't think that they're going to weigh on the market because the focus is clearly on tech stocks. And we'll start to get a little taste of tech next week. We have eBay and we have Netflix reporting this next week. But the major tech earnings will be in 2 weeks. So I expect the bid to remain very, very strong until then. And it would not surprise me this week if we start floating higher and higher up to this SPY 324 level. But I also have to temper my enthusiasm for the market because even though I'm bullish for the next 3 or 4 weeks, I feel like I'm treading on thin ice. Because as we get into the middle of August, my market opinion turns decidedly bearish. I think that we're going to start to see some concerns, some credit concerns. I think that the economy is going to be really dragging. I think that there's going to be a need for additional stimulus. I think the elections are going to start weighing on the market as we get into September. Certainly, if Joe Biden continues to have his lead in the polls, it's not going to be good for the market. He's already said that he's going to repeal some of the Trump tax cuts, so the market's not going to like it. The elections are not going to be as big a factor. Politicians go on recess in the middle of August. The country's in turmoil with the coronavirus. Investors get nervous when there's no one home minding the shop. So, got to be very, very careful as we get into the middle of August. But I still feel that we've got maybe 3, maybe 4 weeks left of decent price action. That means I'm cutting my size. I'm trying to do something right now that generates income but doesn't take a lot of risk. So we're going to look at a search. I'm going to show you a few searches that you should be focusing on. My go-to search this week, I'm going to go into the scanner. I'm going to click bullish. My go-to search will be buy into earnings. You've heard me mention this search. These stocks, every one of them, they have a tendency to rally 2 weeks into the earnings announcement, and they are all inside of that 2 week window right now. So they are going to have upward momentum. So you can click through this list and find out where the strength is each day. You just bring up this list and look for your positive net change. Then you'll be clued into where the strength is. That's exactly how I found the bank stocks last week because you'll see JP Morgan's in here, Goldman Sachs is in here, Morgan Stanley's in here. Let's bring up Morgan Stanley. I like that stock. Now I've got data updating right now, so we're going to see a duplicate of Friday's price action. So please ignore that last bar. But you can see how Morgan Stanley was able to get through that horizontal resistance point. Goldman Sachs is knocking on the door. It's got a 200-day moving average that it's trying to get through. I think Goldman Sachs looks good next week if it can get above the 200-day moving average. But I see this more as a day trade. And if you're doing a swing trade, you might hold it for a day or two, but I would not go crazy on these stocks right now. They've got a little bit of upward bias to them, but you have to watch them day to day. Now, if you're able to go out of the money on any of these candidates and really distance yourself from the action and get a decent bullish put spread off before this Friday's expiration, that would be viable. But I looked through that list and I didn't really see anything that interested me. So we're kind of inside that window now to where I think you just go through the list and you look for day trading opportunities and you lean on that statistical edge. So again, 75% of the time, these stocks have a tendency to rally into the earnings announcement, and we know this over the course of the last 3 years or 12 quarters. So, very, very good statistical edge for us to have. But I'm going to go into a different search, and I'm going to keep this pretty simple. I went in and brought up the custom search engine. I'm looking for good option liquidity. I want a rating of 1 or higher. I want earnings that are after 3 weeks from now. And why do I want that start date that far out? Because it gives me an opportunity to sell option premium for this Friday, the following Friday, or the following Friday after that. I've got some flexibility because the stock is not going to be announcing earnings. So I want to take advantage of time premium decay. I want to keep my distance from the market right now while we're in these final stages of the rally. And then the end date, I can go out as far as I want. So when I added that criteria, I had a lot of candidates. And so I'll show you how many candidates I had with just those two criteria. You want to cast a wide net when you're using custom search. Get lots of candidates in, and then as you have those candidates, you can start to narrow your focus. I'm going to be looking for heavy volume. I love heavy volume, and if I click heavy volume on a daily basis, these stocks all had high volume on Friday relative to the 20-day average volume. Aha, much smaller list. Now, I'm looking for bullish candidates, so let's also look for a stock that has strength on a daily basis, relative strength on a daily basis. Now you can see that's a very manageable list. I can knock through this in no time at all. There are some really good candidates in here, but I'm going to really cut to the chase because I want to keep this pretty short tonight. And SPCE is a stock that I'm going to take a look at. And you can see really nice volume in here. Now I've got to take off that last bar. So the stock was able to rally. It got through this resistance level right here at about 1760, and it got through the 100-day moving average, and it got through this resistance, which is at 1870. So this stock actually put in a really nice candle here on big volume, and it held those gains last Friday. So, do I want to sell options right here at the 1750 strike, let's call it, at the 100-day moving average? I could, but I'd feel much more confident leaning on that 200-day moving average because that puts me down to 1440. Oh yeah, I see a lot of horizontal support right there. 1, 2, 3, 4, 5, 6, 7. Lots of support. That's what I want to do. That sets up well for a trade. The stock has not taken off. You can see how it does have the potential to take off. So it's had some interest, but it's pulled back and now it's just kind of grinding along, forming a base. When you have a market that's starting to get super hot, issues like this are eventually going to catch on. I'm kind of counting on that, but if it doesn't happen, I'm okay with that too, because as long as it stays above the 200-day moving average, I'm happy. So I'm going to be bringing up my option chain, and we're going to be going out to the July 31st expiration date. Now I know that SPCE has earnings on the 3rd of August. If I hover over the E at the very end of the chart, you can see 8/3/2020. That's when the earnings are going to be released. Now, just let me make one point that's super, super important. If you are selling option premium, you want to make sure that your options expire before the earnings date. So, this July 31st expiration date will work perfectly. These options will expire and then the company will report earnings the following week. If you are ever buying premium, you want to make sure that those options expire after the earnings announcement because they're going to retain their value much, much better. So please keep that in mind. So we're going to be looking to sell options that expire before the earnings announcement. And I want to get down to that $15 strike price. And so if I take a look at the option premiums right here, we can see that the $15 puts are 47 cents bid, offered at 50 cents. Now right now, 58 cents. So right now, the S&P 500 futures, they have opened. They are up about 13 points, but I don't know how strong that bid is, especially after a nice market close. So as far as I'm concerned, it's a fairly flat open tomorrow. I'm going to want to try and sell these $15 puts, and I'm going to want to try and get in at a price of 45 cents or better. If I cannot get 45 cents or better, I am not going to do the trade, and I'm going to sell these puts naked. So what does that mean? That means that I better be a willing buyer of this stock at $15, because if the stock drops below $15, I'm going to be obligated to buy shares at that price. Well, I'll tell you, if that unfolds, then we're going to be buying those options back in before we get assigned on the stock. And right now, if you told me that I could buy the stock at $15 on this major horizontal support level, I'd be all over it, because I think the stock has a likelihood of grinding higher. It really looked pretty good last week on heavy volume. So that tells me that buyers are lined up, that support should be very, very safe. So how do the mechanics of this play out? What could I possibly make on this trade? For naked put writing, you have to put up 20% of the strike price if it's out of the money. Actually, your margin requirement will be smaller than that, but we're going to go with 20% for ease of calculation. So for this, I'm going to have to put up $3 in margin per option contract. So if I do a 10 lot, I'm going to have to put up $3,000 to do this trade, but I'll be bringing in $450, and this trade is going to last us for 3 weeks. So if I divide 45 cents by $3, I get a return of 15%. 15% in 3 weeks. That's a really nice return, especially since I'm a little skittish on the market right now. I feel like I'm treading on thin ice. This is a nice trade. This sets up really, really well. I've got some short-term upward momentum. That's fantastic. Who knows? The stock could even break through this big horizontal resistance level right here around the $21 level. Definitely could do that. If that happens, I'm going to be very, very happy, because as long as the stock stays above the 200-day moving average, all is fine. Now, typically on a trade like this, if the stock did dip down, I would be happy to take assignment, but given that earnings are only a week after that, I don't want that exposure, so I wouldn't be able to turn right around and sell calls against the stock that I own, creating a covered call position. Wouldn't be able to do that because I don't want to hold this stock over earnings. I'm just looking for solid support, and I'm looking for that accelerated time premium decay while the market kind of drifts higher over the course of the next couple weeks. I do also want to mention that for the weekly swing trading video, we are going to be canceling all of the outstanding orders that we have. We weren't able to get filled on many of them, and that's okay. So I'm going to go back into the screen here. We'll go into the staged orders, and you will recall from last week, we got filled on MOMO, and we got filled on Amgen. So we had 2 fills. That's really all I wanted. If I could get 2 fills out of 6, I'm very happy with that. I don't want a lot of risk exposure. So we're going to cancel CHWY. That stock looked a little weak on Friday. I didn't like that. AMD took off. That looked really good, but we're not able to get a fill on it. FDX, Alibaba. We're going to cancel those for staged orders. So we got 2 trades off. I really like this SPCE trade, so we'll have another trade on as well. So the order here, let's go and create one, is we're going to sell the July 31st $15 put on SPCE, and our minimum price is 45 cents. Now, the stock could rally tomorrow if the S&P futures are up 13 points, but we're not going to take anything less than 45 cents. If you can get better than 45 cents and the stock is looking a little soft on Monday, hold off. Wait, see if you could get maybe 50, 55 cents. The more you can get, the better. But in any case, I don't want to miss this trade, so I'm willing to do it for 45 cents. So the takeaways here, you've got your SPCE trade that I think looks really good for Monday morning. It's a nice swing trade that we can have on for 3 weeks. We've got this major horizontal support level that we're leaning on around that $15 price level, which incidentally, when you sell a $15 put and you bring in, let's say 50 cents, we're only bringing in 45, you're going to actually be buying the stock on assignment at $14.55, which puts you right down on that major horizontal support level, which is just below the 200-day moving average. So that would be our net price of the stock. And with every passing day over the course of the next 3 weeks, that time premium decay is really going to start to kick in, especially as the market floats higher. And I think you're going to see the stock float higher also. Really like this trade. So we're going to be doing that. We're going to be canceling all the outstanding orders that we have from the weekly swing trading video. And we're going to be looking for some very short-term opportunities this week. That's how I see the market playing out. If you like the content of this video, please give it a thumbs up. Make sure that you subscribe to my YouTube channel and turn on your notifications. I should also mention that I am posting trades on Twitter early in the morning along with my pre-open market analysis. So in the description of this video, I will have a link to my Twitter feed so you can sign up there as well. Thanks so much. Hope you all had a great weekend. We'll see you tomorrow morning. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.